Welcome to our video on the basics of the stock market. Today, we'll explore how the stock market works, its different types, and key concepts that will help you navigate the world of investing. So, let's get started. The stock market is where the buying, selling, and issuance of shares of publicly held companies take place. It provides companies with access to capital and investors with an opportunity to own a part of a company's future profits. There are two main types of stock markets: the primary market and the secondary market. The primary market is where new issues of stocks are sold to the public through processes like initial public offerings, IPOs. On the other hand, the secondary market is where previously issued stocks are traded among investors. Investing in the stock market can be a way to grow your wealth over time. However, it's important to remember that stock prices can be volatile and fluctuate based on factors like company performance, economic conditions, and global events. Before diving into the stock market, it's crucial to conduct thorough research and understand the associated risks. Seeking advice from a financial advisor can help determine your investment goals and risk tolerance. The share market, also known as the stock market, is a complex system of buying and selling shares of publicly traded companies. Various exchanges, such as the National Stock Exchange, NSE, and Bombay Stock Exchange, BSE, facilitate the trading of shares. Shares, also known as stocks or equities, represent ownership in a company. When you buy a share, you become a shareholder, entitled to a portion of the company's profits and sometimes the right to vote on certain company decisions. The value of a share is determined by supply and demand. If there is high demand for a company's shares, the price increases. Conversely, low demand can lead to price decreases. Share prices are influenced by factors like company performance, economic conditions, and global events. Now let's explore some key concepts to help you navigate the share market. Diversification involves spreading your investments across different types of assets and industries. This helps reduce risk and protect your portfolio from market volatility. Understanding your risk tolerance is important. It refers to the amount of risk you're willing to take on when investing. Align your investments with your risk tolerance. Fundamental analysis involves analyzing a company's financial statements and economic indicators to determine its value and growth potential. Technical analysis entails analyzing charts and market data to identify patterns and trends that can help predict future share prices. Market indices, such as the Nifty 50 or Bank Nifty, track the overall performance of the market or specific industries. Brokerage accounts are used to buy and sell shares on the share market. Choose a reputable brokerage and understand the associated fees and commissions. Investing in the share market requires careful research and an understanding of the risks involved. Remember, seek professional advice if you're unsure about any aspect of investing. That concludes our video on the basics of the stock market. We hope you found it informative and helpful. Remember to continue learning and stay informed as you embark on your investment journey. Thank you for watching.